you hear me, everybody? Thumbs up. Yeah. Awesome. Thank you. Thank you. Thank you, Ed. Thank you for the wonderful introduction. I hope you guys all having a wonderful evening, morning, wherever you are in the world. We have people all over the planet here. So definitely, I'm going to try to jam pack as much as I can in the short little time here. Ed, maybe you can give me a heads up right before, like 10-minute warning or something like that. But yes, we definitely are going to cover as much as we can because this is some topic that is very important. You guys all know because you're here. We've all been here coming back to this wonderful community of like-minded crypto enthusiasts. I can see people on here, some of which I've seen for 4 or 5 years talking about crypto, similar faces. And I would actually say we have pretty much well above average here in this room today, crypto experts from all walks of life, from mining to the technical aspects of crypto. But I'm going to be focusing today more on the trading side of crypto, which is something that, yes, I have been doing for a very long time. Why don't I just go ahead and share my screen and we'll get right into it. So a little bit about myself, just so for those that don't know who I am. Yes, my name is Robert Patyk. I have been trading for, like Ed said, 27 years. We mistakenly wrote 23 years on the flyer. Not that it matters. During which time, when I was 15 years old, I fired my financial advisor. I started doing, already had learned as a hobby about trading, investing, anything to do with books, articles, magazines, to do with anything with traditional markets. And anything you do at that age, you do it as a hobby you're passionate about. And anything you're passionate about, you'll naturally get good at if you just put in the time. I'm nothing special. I just simply took a lot of effort, learned, and picked up nuggets of information. Education is something I strongly believe in on a daily basis, now more than ever, because you have to adapt and change with the times. Times are changing faster than they have ever before. So definitely we're on the cusp of generational wealth being created for people that are in the know and know how to position themselves accordingly before the masses. That's why you guys are all here in such a good position that, we'll get into that in a minute. But yes, I did win first place in the world in a global stock trading competition at the age of 21. I've written articles for big publications across the street from the Wall Street Bull in New York City back in 2016, the whole entire calendar year. I remember writing the article where I mentioned that Bitcoin just crossed over $1,000 and I was comparing it to gold prices. So definitely I've been around the block. I have maintained high accuracy consistently, met a lot of people in the know in the industry. Yes, I have predicted multiple recessions. I unfortunately lost real money trading the tech bubble in the late 90s. Back then, we didn't even have decimals. We had fractional 5/8 for prices of stocks. I was writing things down on a piece of paper from the newspaper from yesterday's prices. Fast forward today, we've got electronic trading. Fast forward a couple of decades later, everyone wants to learn trading, probably because of cryptocurrencies, massive growth. And I'm not even talking about the last 2 years. I'm talking about, yes, 2017, when it really caught everyone's attention. We had hyperbolic growth. And at that time, I was already warning people about the warning signs I was seeing, the red flags that I knew, what I learned during the tech bubble crash, where I did almost get wiped out entirely. So I'm not going to say I know everything. I'm always learning, but I will tell you this. I have made literally every single mistake you can possibly think of when it comes to trading over the last 27 years. And, that definitely puts me in a position after having probably over 30,000 hours combined total watching the markets. I'm talking about traditional markets before I got into crypto, gave me an edge to anticipate and be able to predict where could be the most likely least path of resistance for the future of including cryptocurrencies. So back in 2006, here was a picture of myself. I rented a hotel. I paid for it out of my pocket 5 months in a row. I wasn't selling anything. I was just strictly trying to inform the public. Just because something goes up doesn't mean it'll go up forever. In fact, I said we were about to have a crash. Just on here, you can see my top 50 reasons why the market is about to have a crash. That was again in October 10th, 2018. Okay, so I predicted 2 recessions a year before they happened, back in 2007 and again in 2018. So why don't I just show this on a larger screen here so you can see it better. Definitely, I also talked about crypto. So here's an older chart that I showed actually at a convention center, which I'll get into in a moment. But this is basically showing, the ups and downs of prices. If you were to buy something right? And let's say you're going to get in on anything, doesn't matter what you're buying. Prices fluctuate, markets move in cycles, and people are patterns, markets are patterns. They're based off of humans, so nature. So we're able to predict. Greed and fear have a huge part of markets. Mindset is 70% of trading, 20% of portfolio management, money management, and just 10% is analysis. But I'm going to show you how you can be very accurate. I've been surprisingly accurate even for myself, more accurate in cryptocurrencies than I have been in stocks, options, commodities, futures options, and Forex, which I've also traded for over a couple of decades. So here you can see, you'll often see a sharp move up followed by a sharp move lower. The point here on this chart is if you simply just buy and hold or hodl for 10 years, you might end up pretty much where you started, right? You had some ups and downs along the way, but you don't want to waste 10 years just to be where you started. If you can catch profit to the upside as well as profit to the downside, you can actually maximize your gains by learning how to position yourself ahead of the curve when people are buying and selling in bulk. And when I say people, I mean governments, banks, corporations, institutions, and so on and so forth. So fast forward ahead. These are just a few of the predictions I made. I called the top indeed back in December 10th and December 17th, 2017, to the day, literally. To the day I called the top, followed by February 5th, 2018, I called the bottom to the day. And I'm explaining in the next slide how I knew that, okay? Based on the regulatory environment, watching what is happening surrounding the authorities talking about cryptocurrencies. It's at the top, we had the futures start trading for the very first time, Bitcoin futures. So I knew that the banks are going to get involved. They're going to change things up, and either they missed the boat, they missed the party, they want to jump in, so they'll crash the price, or they'll do something like what they did to Tesla stock, where they take a good company, but they'll squish the price down so that they don't let them thrive. And in top of that, they make money to the downside shorting that stock. We also heard GameStop recently. That was the idea. Where they were doing the opposite, a short squeeze. They were pushing the price higher. But anyway, the point is, calling these tops and bottoms are predictable if you know what's going on. The green arrow here, that was the Banking Senate Hearing Committee when the SEC, Securities Exchange Commission, and the Commodity Futures Trading Commission, now that there are commodity futures for Bitcoin, they met in front of the government to testify. Ed likes to say there's not much representation for the crypto industry in terms of the people that are in this room. It's more just the banks representing crypto, which wasn't quite fair. But they were talking about, are we going to regulate it? Yes, we're going to regulate it. I listened to the whole 5-hour boring meeting. All they said is yes, but not right now. In the future, we'll start regulating it. That allowed prices to shoot up a little bit. I said, wait a minute, they shot up a little bit too quickly. Eventually, they're going to regulate it anyway. Blah, blah, blah. Tops, bottoms, tops, bottoms. I've called many of them major ones with surprising accuracy. So fast forward, I've been talking here many times. You say, here's a post I did August 3rd, 2018. Might wish to consider getting out of Bitcoin or digital currencies for the time being, pending fundamental issues. August 3rd, 2018, that was at the beginning of the year before prices really fell. And then here you see a chart I drew with technical analysis. To zoom in on that, I gave a drawing showing red lines and even green arrows back up where I felt the price may go down, pause its decline, go back up a little bit, continue falling. And then this was the actual outcome of that particular chart. This is Ethereum Classic. This is way back in the day. So you can see by learning the patterns, learning the indicators, there are ways to actually anticipate moves ahead of everyone else. Now, there are 3 quick reasons I'll cover. Why did I call the peak in December 2020? Remember, we had October to November, prices hit 10,000 for the first time. November to December, prices hit 20,000 for the first time. And my friends were calling me in other cities even saying, Robert, do you think it'll go to 40,000 next month? And I said no, because I felt like I had 47 reasons why it will go down and 3 reasons why it will go up. And they're like, I have time. And I literally listed all of them for them. but I'm just going to give you the top 5. These are the things that I saw in late December 2017 that told myself to get out of Bitcoin. 3 main reasons: profit taking. If something shot up like crazy, like never before, like that, so quickly in such a short amount of time, I know that things like to revert back to the mean like an elastic band. The resistance is to go backwards. So if someone made 10 grand or enough to buy a Lambo, they're going to want to cash out to be able to buy that Lambo. They can't do it with Bitcoin, right? Okay, I see it. Cardano, Dogecoin. Okay, and so basically, the other issue was taxes. So, you know, we saw the issue that the regulatory agencies were saying that they're going after Coinbase for anyone that made over $10,000 or $20,000. So, you know, they're going to have to start reporting their taxes for the first time, and that was an issue that could cause some people to scare them away from cryptocurrencies back then, when it was even more a relatively new thing. Because I would even argue today cryptos are still relatively young thing, you know, about 2008, so 9, so 13 years old. So futures contracts started trading. Now I'm actually commodity futures trading for many years, okay, even before 2017, for about a decade. So I was watching gold prices, oil prices, the actual commodity. So the stuff that's in the ground, you can buy and sell contracts. You need big amounts of money to do that. You need 5,000-10,000 just to buy one contract. And the typical fluctuation, the leverage, for those that know what leverage is, was about 16 times leverage for those contracts. So the price of gold didn't have to move more than 1 or 2% per day, and that was a massive move. With you amplify that by 16, you can make 16% a day. So I knew that the typical path of markets was slow moving. And then here you got crypto and Bitcoin jumping up and down violently. I knew that that violent volatility would be cooling down now that we have Bitcoin futures that will trade alongside bank traders that are also trading gold futures. So that was the reason why I saw volatility going to slow down. Maybe the price would cool down and the whole behavior of trading cryptos would change. So yeah, it went up too quick, too fast. It's not behaving like a currency. It is behaving more like a commodity back then. Still to this day, I would say it's more of a commodity than it is a currency. The way it's behaving with the massive jumps and swings, it's not something you want to measure goods and services in, because you don't really have a stable price. Tax season, that may change though in the future. Tax season is nearing, that we already mentioned, and then the futures trading. So I've got the dates here. So here's Peter. Let's call him Peter. He's got Bitcoin, right? So up until 2017, right, Peter had Bitcoin, and the only way he could make money is if he gave this Bitcoin to Sally for 11 grand. Now, Sally, how's she going to make money? She can only make money with Bitcoin if she takes the Bitcoin she purchased for 11 grand and sells it for 12 grand back to someone else. And then they bought it for 12. They got to sell it for 13. She bought it for 14. Then she'll sell it for 14, 15, 16, 17. That was the only way to make money, was if the price went up. However, the Bitcoin market was now impacted when 50% of the market forces were no longer people just making money, finding, I guess you could see, a greater sucker to pay even more for it, but there was no way to profit on the shorting of it. Okay, so banks would not sit idly by watching their industry become obsolete. They said, no, we're going to step in. Maybe we missed the boat. Yes, the early generation of Bitcoin was decentralization and trying to even replace banking system. But I was real. I was like, you know what? Banks have a lot of fiat money, and they can use a lot of power with that fiat money to try to control prices. And therefore, I anticipated that they would even create Bitcoin futures. So here's what I want you to picture. This blue ball here represents Peter and Sally. They're just buying back and forth. Whoever pays more, they got to sell it for more. That's the only way they'll profit. They can't make money if the price goes down, other than being on the sidelines while prices drop. Then you got over here, that used to be how 100% of Bitcoin was measured in terms of prices. That became 50% of the prices of Bitcoin and the driving forces behind them. What was the other half? The other half was now this red semicircle that's represented by, you've got banks over here that always have existed. And they are now trying to get in on the action to help control prices. Okay, so they did that through Bitcoin futures and through the use of unlimited fiat currency to control those Bitcoin futures. So when you have something moving up and down like crazy, you don't know where the price is going to go. Traders will often look at future commodity futures prices. Even the stock market has a future, so you can guess what the price will do for any hint you can get. So anyway, with that power, those contracts commenced trading on December 10th, December 18th, to the day that Bitcoin peaked for the first time, right? And since then, we've been saying that it's kind of funny when people were assuming it's just going to go straight up to the moon. Is a new word that crypto traders invented. Traditional traders never used that terminology. So we have a lot of new vocabulary created with the younger generation, we could call it, doing trading now. But just about, what was it, Ed? 3 months ago, about 3 months ago, I actually said that this picture that we had actually shown 3 years ago, I said to Ed, you know what? I'm going to retract that. This could be it. Were literally my words on this meeting that we're on today. Okay, so, a few meetings back. So I said this could actually be the time when we'll get there, and we're already halfway. We're at 50 grand now. When I had said that, we were still below the 20 grand. We were like, you know what? I think we're going to hit the record and more than exceed it. So it definitely pays to surround yourself with people that are in the game, have been watching it, and sharing experience with beginners, intermediate, and advanced traders, and sharing information. Myself, I was invited to speak at a convention center here in Vancouver for December 2018, talking about how I had predicted the 20,000 peak and where we go from here. On that day, I will admit, there were not many people in the room. Prices of Bitcoin were around 3,500, right? So the demand, remember, the fear and the greed, the human nature of people, they gave up on crypto, when actually I became even more stronger advocate, saying that's the bargain prices when you can actually be buying. I'm known for calling it how it is. I'm known for going against the grain, being a contrarian, macro top-down investor, and finding opportunities where I'm buying when everyone is fearful, and fearful when everyone is buying. So Warren Buffett actually created that quote. So yes, I told people, I actually pulled up a chart, talked about, just in the matter of 30 minutes, I taught how to read charts, very basics, and it very accurately. And they said, well, what do you see now? We pulled up the chart. We saw immediately that it would jump up to 10,000. Okay. And it ended up happening. Here's an event we did actually with Ed in Vancouver. We were teaching people about crypto trading on this particular day. I'll show you a couple of those slides perhaps today. And definitely people were so eager that we stayed, 3 hours there, and people wouldn't leave. They actually demanded we do part 2. So, this was something that even back then, 2000, and I think this was 18, people were keen on the altcoins. And we were warning with Ed about, don't just necessarily buy any, we can call it now shitcoin, because 90% of those altcoins were just, made up. So we definitely have been around the block. We've been teaching about blockchain and many different events. I've done here also with Ed here. So he's been around the block. He's been from the basements at the top of the screen here, underneath literally the street of downtown, where people were just getting in on the early, I could say early stages of Bitcoin, all the way to penthouses, teaching people how to safely get into crypto projects, and which ones to avoid, more importantly, because there was a lot of shady ones that were popping up in this taking advantage of this relatively new industry. So these were the early days of Dogecoin. I can remember that they were talking about it back then, and it was known as a joke. And I said, you know what? It's funny because somehow I had this funny feeling that people are going to like the cute dog more than any coin, when you have 5,000 different coins to choose from. So that's interesting. I've also taught at many events about real estate. That's something else I do on the side. I'm very well known in that industry. I've actually purchased 100 units in a single year. Turned out to be the #1 single city in North America for price appreciation over the last 5 years. So that wasn't an accident. The price wasn't even on the top list of top 35 cities. It ended up being #1. So I'm teaching a full room full of one of the individuals here is the #2 largest single family residential landlord owner in all of Phoenix, and we're picking markets. We're talking about how to pay down properties in 1/3 the amount of time. Yes, I was also featured on the news for buying those 100 units in a single year. But that's not just something I do on the side. I'm very accurate on real estate because of learning how to do the research, learning how to do the analysis, writing articles, teaching what I see in the markets, and helping others get to the next level, right? It's all about growing other people first, helping someone else become successful. That's how you're going to become successful yourself. So I'm a strong believer in doing that. That's why we're here tonight. So why don't I do this? Why don't I share with you something right now that you can take home with you, something that you learned that you will never look at cryptocurrencies ever again the same way. So actually not here. So let's go here from this current slide. So what we have is your skill level. You're going to increase that constantly. You're going to be very happy you did so, and stop trading blindfolded, because a lot of people are doing that. I agree. Most people don't do well in the markets. Most people will get wiped out in the markets because they don't have a mentor, they don't get the proper education, and they just blindly throw their money at the wall, seeing what will stick. That is not how you want to drive down the highway with blindfolds. It's not safe. You're better off not even getting in the car if that's the case. So what I'm going to do is show you quick ways where you can actually increase your returns, increase your gains. Again, I'm not licensed financial advisor. This is all education purposes only, but also not just to make more in less time, but to do it safer and more with less risk. Okay, so it's unnecessary mistakes I see a lot of people making, and I'm going to help you avoid those. So with that being said, let's jump right into it. So again, we saw those Bitcoin predictions here. This is another Bitcoin chart over here that we were warning people about. At the same time, I was warning about not listening to other bankers who were saying, oh, they hate Bitcoin. At the same time, they were buying it as calling it a fraud. And then later they turn around and say that they regret what they said. Now that they had purchased enough, they would actually push the price higher. So I can see what's going on. I see the big picture. I see what the big boys, the whales, the big fish are doing, and the sharks. So I know how to navigate the shark infested waters, and without, being discouraged by what you hear on television. I have this joke. If you just simply do everything opposite of the TV, you'll probably be right 80% of the time. You got to remember who's paying who for saying what on television. So at the end of the day, decentralized, that was the beginning of crypto. Basically, banks were saying, you know what, we're not going to encourage people to buy. So they kind of missed out, I have a feeling. But regardless, I do know that they could either try to push prices down and profit from the prices going down. Then they can load up on the down cheaper prices, or they would have a few other tricks up their sleeve, which we'll get into. So just how decentralized is Bitcoin? Now, I do like mentioning this. We don't know who exactly created Bitcoin. You can say Satoshi Nakamoto, but you don't know if that's a person even, or a group of individuals, or even an agency. So yes, it is nice that it is decentralized, that the way the blockchain technology goes, that's here to stick around. It's not going anywhere. Blockchain technology will be in multiple industries. A couple of years ago, even, we were already saying it'll be in every industry. Okay, it just makes sense. Like, why would I have to pay a middleman to sell anything? That goes for houses and cars. If I can just go up onto a blockchain and say, here's my car for sale, and everyone can see it on their computer that it's for sale all of a sudden, and I don't have to pay anyone to sell it for me. So definitely this is the future, but we don't know who Satoshi Nakamoto is. I only bring that up for one reason. In the future coming weeks, when you come to this presentation, I want you to keep that in mind, always at the back of your mind. If you don't know for sure who is Satoshi Nakamoto, you also don't know who he is, or she, or they are not. So that is something to pay attention to when deciding on the future of where the direction of all cryptos are going, or the crypto that will end up being the one that takes the crown. So definitely the regulatory environment is something to keep paying attention to. Now, this is very important. If you're going to write down just one thing today, this is what I want you to write down. You have to be careful where you're getting your information from. Okay? Who are you getting your information from? Because I can see time and time again, so many, even the YouTubers, you have some of the largest, biggest networks on YouTube, yet they're conducted by some of the youngest people. So that makes you want to wonder and ask the question, how many years have you been trading? And how many years have you specifically been trading cryptocurrencies? Because if it's, for the last 10 years, we had a bull market and someone's been trading less than 10 years, they don't even know what a crash is. Okay. Necessarily, but maybe in the last 2 years they finally learned, right? I saw 2 years ago they were saying everything's going to crash, but that will mean Bitcoin will go through the roof. And I could tell them, no. Just like in 2008, exactly the same thing happened. Even gold dropped initially with everything else. They had to sell good assets to cover the losses of their bad assets. And then finally, after a few months, gold could take off. Same thing happened just a couple of years ago with gold. And same thing happened with Bitcoin being in tandem with gold. Now it's detached once again. I'll get into that when I show a chart. First, I want to speed along here and move on and say this. In the traditional markets, you see the same thing starting to repeat in crypto very regularly. So I'm going to show you one example here. Here's a picture of myself. You can see I've got my shoulders, my head, and my shoulders. I'm just going to show you one pattern right now that we use in stocks, we use in Forex, we use in cryptocurrencies. It's exactly the same pattern. This is called a head and shoulders pattern, okay? You can also have an upside down version of that. And how that basically works is you have to have a trendward up, a left shoulder, a taller peak, right shoulder that's smaller, and you can see this repeating time and time again. I saw this pattern in the price of Bitcoin back in 2016, before Bitcoin futures started trading, before banks were able to easily manipulate the Bitcoin futures prices. There were no Bitcoin futures yet, although I already saw on Coinbase's chart. It's just the ugly line chart, very simple chart, but you could see many, many head and shoulders. Here's an example of an upside down one, and it goes straight into a regular one. All right. So you can see this just kept repeating time and time again, so many times. And it was ridiculous, actually, how many times. In fact, you're going to see it today. I'm going to show you today's chart of Bitcoin that we have literally 10 of them just in the last couple of days. Okay. So also here, moving on, we can see here more charts. They always have those patterns. So the last step was you draw a neckline and you can actually judge the distance of the head. You flip it upside down. You can see how far down it'll go. This is just one quick, basically I give you like a 30-second lesson on one pattern, which is normally I walk you through step by step twice so you understand every step what it means. But all I want you to see is the big picture here. Okay. You've got that shape. Now, here you got someone who's not me, okay? This is someone else's chart. I did not create this chart. After just seeing that slide, just over the last 60 seconds, you now are able to identify a head and shoulders. How it works, you have to have a shoulder after a long trend, a taller peak for a head, and a smaller peak for a shoulder. And then we draw a neckline. If you fall below the neckline, that is when you have your confirmation that it will fall by the same amount as the height of the head from that point. Well, look what this individual decided to draw here. They said it's a buy zone. Even though it is below the neckline where banks and institutional traders will sell heavily, thus being a self-fulfilling prophecy, you're being told by some inexperienced trader, because you forgot to maybe ask them, hey, how many years experience do you have trading, and they will say 6 months or 1 year, then you know that they're not going to weigh this chart as significant as a trader of 26 years saying, actually, I think this will drop at the same time they're telling you to buy. So this is just a warning sign, one simple lesson, how you can be getting the totally wrong information online if you're simply not careful who you follow. So if you're going to write down one thing, write down this. Ask everyone you come across, even if they're the biggest YouTuber on the planet, say, how many years experience have you trading crypto? And how many years of trading experience do you have outside of crypto? This will give them an edge of understanding really how the world, the markets, the banks, they all work, institutional traders, and so on and so forth. So this is just something that I wanted to point out real quick. And that's what I'm writing here. Always ask someone how long they've been trading when looking at their technical analysis. So technical analysis just means charts. All right. So now what I want to do is give you quickly 3 secrets. All right. Just for being here tonight. Three quick secrets: have proper mindset, avoid and limit your losses, and maximize your gains. This is something that I'm actually going to be going into deeper on. I won't have time to do that today, but maybe we'll let you know with Ed after how we can get you to see all those things. But basically, here, three quick secrets. So what I'm going to show you here. From the current slide. So let's do that. So the first is mindset, right? So you need to understand stocks, commodities, Forex, crypto, economic data, geopolitics, what world leaders are saying, central banks, monetary policy, interest rates, printing of money, stimulus checks. They all come in hand. We just saw Ed mention 2 trillion of stimulus, 1.9 trillion of stimulus, double almost the market cap of Bitcoin, which is now again over 1 trillion, by the way. It makes you wonder, if they just print another stimulus 6 months from now, and it's again 1 or 2 or 3 or 5 trillion, and they say, oh, but it has to be this digital currency, that could single-handedly create the new most important digital currency, whether that be Bitcoin or something else, right? Central bank digital cryptos are coming, and this is a known fact now. It's confirmed. So pay attention to the news, current events. Everything works hand in hand. If you can learn one, you'll get an edge in learning the other. So it's definitely going to help you see all the pieces of the puzzle of the big picture to see the future direction of where prices are going. And I want to let you know that I also look at not just one thing. I look at technical analysis, fundamental analysis, geopolitical analysis, and sentimental analysis. I'm not one of those guys who's going to say, oh, I only look at the price action and I ignore everything else. You don't need it. Those are usually people that have not even taken the time to learn something. It's kind of like saying I'm going to drive down the highway with my eyes closed. Take in all the information first and then decide what you want to ignore. And from day to day, sometimes charts will be important, sometimes news will be important, sometimes the economy will be important. Sometimes you'll have the perfect chart set up, but one tweet by one politician can throw off the market entirely for the rest of that day. So I'm letting you know, I'm well educated and well versed in creating strategies of my own. I've invented that no one has. I've been trading for 26, 27 years. I've done all 4 categories of analysis for stocks, options, commodities, futures, options, Forex, crypto. And I also trade short-term scalping, like 10-second trades, all the way up to 10-month trades, all at one go. I'm just going to show you real quickly, skip through some of this. I'll have to show you later. But basically, here's a good one. So resistance and support. You're basically looking for a V shape, something significant, the first thing that catches your eyes. And guess what you're going to do? You're going to look for trend channels, support and resistance channels, and you're going to find opportunities to find the middle line. Okay, because that's where the price likes to revert back to the mean, back to the middle. And what you're going to notice is that you can actually see where is a good opportunity. Now that you know that the price will have an 80% chance of remaining within the range, no strategy, by the way, is 100% guaranteed. But if you combine an 80% accurate strategy with another 80% accurate strategy, you're in very good shape. So here is what most people do. They just get started trading. By the way, everyone should be trading, not just handing you over money blindly to a stranger to look after for you. You can learn this. It's not as complicated as some may have you believe, because they want you to just hand over your money to them. You can learn how to do this on your own. However, when people do get started, I see the same common mistakes repeated that are unnecessary and are avoidable. Here's one of them. So normally the price could be at any random time, let's say here at this blue dot, and they're going to decide, I'm going to make money if it goes up. Already, a lot of people don't know you can profit whether markets are up or down or sideways. Okay, you can actually buy both directions at the same time even, and you don't care what happens and still profit. So here you can see they'll buy it, but here's the problem. It can go up just as much as it can go down. It's basically 50-50 at that particular moment when someone who is newer to trading didn't realize that they should be more patient and waiting on the sidelines for the best opportunities. If you're waiting on the sidelines 95% of the time, you're going to buy the 5% best, highest probability setups. Okay, this is what you would look for. Something down here that can go down only a little bit, but has a potential to go up a lot. But let me ask you a question. If that first example at the yellow line wasn't a good time to buy, would it make sense for us to continue holding on to whatever crypto we bought when it gets to the yellow line, hoping it goes to the red line? If we wouldn't buy it there, then why would we keep holding on to it there? Okay. If you're learning how to use stop losses, that's a whole different story. I do teach that. We can cover that on another session. But here's what I would do. I would actually get out earlier. I'm still able to make $3 for every $1 I'm risking. It's no longer a 50-50 game. You can control where you enter. You can control where you get out. You can control your maximum profit. You can control your maximum loss, and make sure you have a healthy risk to reward ratio. So these are just a quick example of some of the stuff that I will cover on the future sessions. But you know what I can do right now really quickly is, why don't I just pull up a chart, okay? Let's look at the current price right now. What's going on in the markets, right? So I'm going to go to tradingview.com. This is a free website you can check out. And I'm going to show you something really cool, all right? Don't look at this. Let's just go to Ethereum. All right, so Ethereum, USD, right? So here's a chart. I'm going to reset this. And do you notice something right off the bat? Okay. I just updated this. First of all, let me zoom in. Okay, so I actually drew a head and shoulders, since we already covered that one pattern out of many different patterns. And I anticipated 2 or 3 different scenarios of head and shoulders before they happened. Okay, you can see when I made the drawing and how it turned out. So I anticipated, looking at the blue dotted lines here, I actually anticipated that the price would break below this blue dotted line in 9 hours. These are hourly candles, 1 hour candles. So it actually took 10 hours, not 9 hours, to break the neckline and then crash. How much does it crash by? We take the blue circle, because that's the blue dotted lines, and it literally went exactly, that far down. So that's a head and shoulders right there. All I'm trying to show you is that how many times do we see a head and shoulders in here? And you can see, here's another one. Right, so we've got a head and shoulder there, broke the neckline, and then fell by the same amount of the head. After that, I don't care what happens. It's 50-50. Okay, I didn't even bother drawing that one in. I could see it with my naked eye. This one is the latest one that I've updated. This is a live price of Ethereum right now. Again, this is not trading advice. This is simply educational purposes only. How I draw, really messy, because I did a class earlier today teaching people for 2 hours how to trade for some of my friends. And you can see here, I drew a green line, and that green line was the head and shoulder. Okay, and you can see here it had the right shoulder, and then finally came to this neckline here. And that neckline was broken yesterday, which means we're going to look for the height of this head to be the target for how far prices will go. And we can see we've almost hit that level already. Even before that's happened, look what's happened just today for Ethereum. Who can tell me in the chat, do you see a head and shoulders? Let me just check on the time here real quick. All right, so basically we have a head and shoulders here. You can see 1, 2, 3, 4. Boom, we connect these, and we can see if the price were to go to here, I can see a fall back down to here, which coincides with this black line, and the price would be 1666 probably. Okay, and currently the price is 1800. So that's not a small move. We're talking about $135 move in the price of Ethereum to go to the downside. However, we also see channels. So if you think of a house, you got the ceiling and the floor. The price will have an easy time to stay within the floor and the ceiling about 80% of the time. So here is a channel that we can see the price will like to come to. Now, if we actually look at the actual price here, it hit the top maybe once, twice, 3 times. It hit the bottom maybe once or twice or 3 times. How about the middle? 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay. The point is, it likes to revert back to the middle more easily of a channel. So we saw earlier when I had drawn those channels, you can have upward trending channels, the price will stay within sideways trending channels or downward trending channels. Okay, so right now we are near the middle. That is not an opportunity for me to pick either side because I'm making $1 or losing $1. I don't like to trade like that. Ideally, I'll be looking for an entry down here to make money and getting out here, or I'll sell here to make money going back down. So there's better times to find when to get in. One of the ways to do that is to peek at some of the indicators here. And again, just think of this one example I'll do really quickly to show that anyone can learn this. It goes up and down like a roller coaster. All right. We're only looking at the next big move up, big move down, big move up, big move down. Where are we right now? Where do you think we're going to go, up or down next on that particular indicator? Up is the higher likely chance. So if I have to take a position for the next few hours, it would be to the upside strictly because of that stochastic indicator. However, I also teach an indicator that I've created that I've seen use that I've implemented for over 10 years. I just take the peak of the MACD indicator here. I connect the dots. And if I replicate that on the price chart, I can see where the price, not where it should go tomorrow, it's where it should have never left yesterday. So we could easily anticipate a fall back down to that level it should have never diverged away from. This is called a divergence when we have the price went up instead. Okay, so I'm actually more bearish, and that would actually complete the head and shoulder pattern. So I'm slightly more bearish still for Ethereum, definitely here. Now check this out. So if we go Ethereum, you can see quite a few head and shoulders patterns there. I'm just going to quickly pull up BTC USD, all right? Because there's a couple things I want to mention here. So I was teaching a class here talking about wedges. When you finish the wedge formation, the price has to move by the same amount as the initial distance here. So we actually had one here. It broke. I had a target to the downside or a target to the upside, depending on the breakout. It chose upside. And on that day, I had actually anticipated that we would move up, do a head and shoulder, which it did do, and recede back down. And then we've got more upside down head and shoulders. Just one pattern I conducted for you today. Look how many times it repeats. This is a live chart of Bitcoin, 1 hour candles. So every single candle shape is exactly 60 minutes on this chart. I have to zoom in so you can see those candles better. But nonetheless, you can see so many head and shoulders patterns, and they're actually being correct. Look at this green one over here. I have quite a bit of things on this chart. I should do a cleaner one. So why don't I do this? Let's go quickly. Let's go Ethereum. I just want to show you something cool right now. All right. So here's a price chart. Let's go 4 hour candles. Okay. So here's Ethereum. Okay. Just ignore every other line other than the candles. In fact, I'm going to get rid of the drawings. Okay. And I'm going to get rid of the 50, 100, and 200-day moving averages and the Bollinger Band. Very simple chart. You can easily see the head and shoulder that's upside down here. We broke the neckline, and we shot up by that distance easily. Okay, but that's not what I want to show you. I'm going to show you something cool. We use ratios. Yeah, and then I'm going to pass the mic over. So basically what we got here is I'm going to go compare. This is Ethereum, and I'm going to compare it to BTC USD. Another currency that ends in US dollar. By comparing two things to one another, did you know that you can actually find ratios and opportunities? Here's an example. The yellow line, Bitcoin, was lower. What did it do? It shot up to be matching in tune, in line with Ethereum. Then Bitcoin went up too much. It actually was higher than Ethereum. It dropped more than Ethereum. So right now, if I had to pick, I would rather say Ethereum goes up, Bitcoin goes down, or both. So we teach you how to combine different, and you can get more than one line on the chart. The point is you can go back as far as you want, and you can see when are the opportunities. Here was a great time to sell Ethereum. It dropped down to Bitcoin where they matched up again. So on the longer term, we can actually see that this is going to fall because there's opportunities to identify when something will move. Based on just looking at the indicators too. So here's one last example, and then we'll move on to the next speaker. But basically here you can see, if I pull up a chart here, Okay, and then I'll be having to do maybe another session to get you more detailed analysis. But basically, what you can see here is a daily chart of this currency. So this is one trade that I did. Currencies move exactly the same like cryptocurrencies. I actually sold this one, held it for 9 months, and made 700 pips. And then I got out, and then now it's gone back up. Why did I do that? Check this out. This is so cool. We're going to look at just this one indicator over here. All right. Look how many times the pattern repeats again and again and again. The indicator went up, the price went up. The indicator went down, the price went down. The indicator went up, the price went up. The indicator went down, the price went down. You can do this day and night. You can do short-term trades, long-term trades. You can do, doesn't matter. The strategy works the same. The head and shoulders works the same. The patterns work the same. The indicators work the same. Candles work the same for all things you trade: stocks, options, commodities, futures, options, forex, and crypto. Who can tell me what's the next move, up or down? More likely than not, for the US dollar versus the Japanese yen, the US dollar will go down. Why does this affect crypto traders? If the US dollar is about to go down, and we can, confirm that by looking at other stuff too, you see that this is in the range of this blue zone here. It's near the top, likely to go back to the middle. If US dollar drops against the JPY, what about BTC versus USD? If they're on the opposite side, US dollar here and US dollar here, if US dollar is going down, that means Bitcoin will go up. So that's pretty much all I have time for today. I couldn't squeeze in more lessons for you today, but I just want you to know that it is very, very powerful stuff. If you can compare multiple assets to each other, you can actually see which one has a better value, a lower value. You can actually see that, I didn't mention that when you buy a $100,000 house, you don't need $100,000 to buy a house. You only need maybe a $10,000 down payment. Well, with Forex trading or crypto trading, you can trade $100,000 of crypto with only $1,000 in your trading account, right? You get 100 times leverage. Then you know how to put safety measures. You don't want to just do it blindly like most people. You need to learn what a stop loss is. I'm going to probably have to teach that on another class, Ed, because we ran out